Hi, this is Raghi, and I was just chatting on Gmail with a Gmail chat with a buddy of mine, and we were just talking about the dollar Canada. The interesting thing about the dollar Canada is right now, we obviously have some data that would make this particular pair on the radar for a lot of traders. The crude oil inventories number is coming out at 10:30. So don't underestimate that if there is a buildup or a large buildup or a large drawdown that is beyond the expectation, the forecast by the way is for a drawdown of 1.3 million. If there is a large buildup or drawdown beyond that expectation, then there could be some significant moves on crude, which, by the way, I have to mention has been in a strong uptrend. Strong 12 to 2 o'clock angled EMA wave. I've got my solid green grab candles. We've pushed up higher and accelerated through that 200 period simple. So everything is just firing on all cylinders for the bulls here right now in crude. Now what's interesting when we go back to the dollar Canada is how that strength in crude has not translated into this pair moving lower as the loonie gains on the US dollar. Obviously, we can't ignore the US dollar's part in this pair's movement. Notice here that we have a sideways US dollar as well, a dollar that's not really losing a lot of ground. In fact, if anything, we could argue that this is a slightly bullish to neutral or slightly neutral to bullish market right now. So the loonie is not, in fact, having a very successful time gaining on it. But nonetheless, we're dealing at that range-bound dollar Canada, as you can see here. And this is how I perceive this movement. I have a lack of a bullish or bearish directional bias on this time frame, the daily chart being the most psychologically significant to me. So I don't have a bullish or bearish directional bias. In other words, I don't have that up or down trend acting as that dominant or overall psychology whereby if we're hitting support in an uptrend, people will typically buy it even after a pullback. And if we're in a downturn and we rally, people will sell into the rally. Again, if that overall psychology were bearish. We have neither here. So when I do not have an overall psychology dominating the market as seen on the daily, I will then focus on short-term time frames. And the shorter-term time frames are basically indicating a few things. One, either fades, okay, or really nothing. There's not a lot of clarity short-term. So when I look at what I can do with this dollar Canada, I do have arguably what's turning into a congestion market starting to consolidate perhaps. When I look at this 15-minute time frame, maybe a triangle pattern is starting to develop here, a very large one. But since we are still very much in the wide part of the triangle's development, it's pretty common that we see a 2 to 4 o'clock wave and more of a congestion mannerism, as opposed to if we continue, the volatility should decrease, the range should also narrow, and we'll segue into more of a flat 3 o'clock consolidation wave versus the congestion we see right now. Triangles are congestion to consolidation patterns as the range narrows, being squeezed by the uptrend and downtrend line of the pattern. That's one view we can take, but again, nothing imminent. What it then takes me over to is the 60-minute time frame, which is kind of on the edge of whether or not I want to be reliant on a longer-term intraday time frame to have organized sentiment and momentum to follow through higher. Right now, we are triggering, and let me show you. Right now, at this very moment, we are triggering a swing buy. We do have a 12 to 2 o'clock angled wave on the 1 hour chart. These are not smooth 34 EMA lines. That is one knock against this setup. But on past pullbacks, despite the ugly looking wave, there has been support within the area between the 34 EMA high and 34 EMA low. So I can, for now, look at this and say, okay, perhaps there is a bit of support I could expect here. I also have the power stats on this chart, which show that I should be getting support pretty much at the 1.0229 level, and that's in line also with the 34 EMA wave middle line, the EMA close support. So this could be a good swing trade with anticipation of prices moving back up towards, say, the 265, 270, 270 level. But remember, and here's where I want to go back to that daily time frame, and I want to insert a stochastic. I'm going to insert a fairly slow setting, a 21 period setting, and notice we are overbought, which in and of itself is meaningless unless you look at the market phase we are in, which is sideways, which then adds relevance to this indicator. We have peaked in the past, not too long ago. This candle right there shows a high of 265, 1.0265. Today's high was actually 1.0286, but at that 265 level, that prior resistance, and the overbought stochastic, that could be a reason to fade. There's a distribution fade, a sideways market. Now, I don't know that I'd consider this a great example of a distribution market. The wave might be a little too flat. So if nothing else, this could simply be a market that has a range, and we could continue to see it trade within this range unless or until the loonie can find some direction, either with that overall strength we're seeing in crude, or against the dollar if it starts to fall out of its own range that we can see it's stuck within right now as well. So a lot of ifs, but what I really want to focus in on here and emphasize is when that daily chart, when this time frame that you see in front of you right now lacks any bullish or bearish directional bias, it is my opinion that you're much better off focusing in on those shorter term intraday time frames, the 5, the 15, the 30. The 60 is iffy, okay? You're starting to get a little bit longer term. You're starting to require a little bit more longer term expectation, necessity for that organization of sentiment and momentum. But to me, you're better off staying short term, and we talked about that 15-minute triangle, and perhaps that might be the way to go as we approach this 10:30 a.m. Eastern Standard Time crude oil inventories number, where there is an expectation for a drawdown of 1.3 million barrels.